All right, welcome to Hot Picks. We've got Dennis De Silva, Senior Portfolio Manager at Middlefield, and we are focused on agriculture. And people are naturally gravitated to this sector because we hear the same thesis. Population's growing, you got to feed the world. It doesn't always pan out, though, in stock performance, and this year has been a perfect example. All of these fertilizer companies are down over the past year. Why is that?
Well, you know, it's characteristic for any commodity where you see a bit of a boom and a bust to some degree. Things like the Ukraine war, the pandemic, more volatile weather conditions have played havoc with commodity prices, especially things like nitrogen and potash and phosphates. So it's not a surprise the Ukraine war kind of supercharged things. You know, we sort of saw crop prices already increasing since 2020, and I think the Ukraine war supercharged crop prices, and then there was a follow-on effect for things like potash and nitrogen because of the impact on gas prices in Europe, as well as restriction on Belarus or Russian sources of potash. So it's not a surprise we saw that significant move up, and then as things kind of settled down, things started to move again in the market. Pandemic kind of reached its plateau. You start to see prices come off. And there's been a bit of a buyer strike also because, unfortunately, farmers, I guess, saw retail prices remain sticky while wholesale prices have been coming off. So they've resisted refilling inventories. And I think it's only now you're starting to see that come back.
I'd like to spend a moment on that issue of prices, because you certainly see that anxiety show up when, you know, the Indian contract for potash prices is revealed, and it's much lower than last year. But put that into context, you know, unaffected, I guess, pre-pandemic, pre-Ukraine war, are they still getting attractive prices relative to that kind of disruption?
Yeah, I think prices are reaching more normalized levels. I would argue the valuations are reflecting further downside, which I think is unreasonable. But if you look at where we are in terms of stock prices, like the three we'll talk about, especially the fertilizer names, they're back to kind of where they were before the Ukraine war. And I would argue the fundamentals have improved, and we expect things like higher gas prices or disturbances of potash flows to remain a theme. So it's kind of a bit silly to say things should go back to where they were. We're probably 10 to 15% higher than pre-war levels, but that should be expected. And again, as we talk about some of these stocks, you'll see how the market probably is discounting another 20 to 25% off those prices in terms of valuation metrics.
And lastly, we will get to the picks, don't worry. But this federal worker strike, you have those in the ag industry calling out today saying that we are going to see effects on the grain industry because of the people that are on strike. Is that something you watch at the margins? How do you think about that as an investor?
I mean, we're assuming that the strike is not going to be a long strike. So I think the actual impact will be based on the longevity of the strike. And I think history would show the government's probably motivated to get it done sooner than later.
Okay, let's get to these picks. You've got Nutrien, CF Industries, and Corteva, which is kind of a seed play. Let's take Nutrien and CF Industries, if we could, together, just because we're short on time. What do you like there, and what's the upside?
Yeah, I look at it as the fundamentals are very strong, as I said earlier. You know, CF is a nitrogen producer, the largest in the world, so very focused. I look at the valuation reflecting something like sub $325 US a ton. Right now, the spot market is closer to $400, and that's off of a low of almost $300. So I think the upside is significant in terms of if prices just stabilize where they are today. You know, if you use spot prices, that's a stock that could be north of $110 US. And right now, it's obviously well below that. So I see that kind of angle for CF. Nutrien is kind of the grandfather. It's kind of 40% potash, 30% nitrogen, and 30% retail. It's got that retail, which is nice and defensive. Similar types of motives. The nitrogen, the same argument. Potash, you mentioned the Indian contract. Yes, well off the highs of 590 with last year's contract, but still elevated. Yeah. So strong fundamentals in terms of pricing. Similar type of upside also for Nutrien.
Corteva kind of got on everyone's radar because the Nutrien CEO left to go work there.
Yeah, great sign of confidence. Chuck went there in 2021. Since then, he's bought about $5 million of stock personally, so reinforces his view on the stock. One thing to keep about Corteva is that it's a seed producer, crop protection, seed innovation has been the biggest driver of yield improvements in the last 30 years. So ongoing investments in that field are important for farmers to reduce crop loss, reduce input costs like fertilizer and water, and to increase yields again.
All right, Dennis, thanks so much for that perspective. I appreciate it. That's Dennis DeSilva, Senior Portfolio Manager at Middlefield.